Good morning, UPBOptionMillionaires.com. It's March 3rd, 2015. Stock futures a little lower to start the day. It's about a half hour before the market's going to open for trade. The U.S. dollar index overnight hit an 11-year high. Looks poised to take out that triple-digit figure in the short to medium term. You can look, I brought this up at StockTwits. Look at this beautiful pennant formation. I don't even have to draw the lines. That's how clear it is. Prices started to narrow and finally broke to the upside out of it and looks really bullish here. A move over 100 looks to be coming, and that's the last time we saw it was back in 2003. You can see the move we've had really coinciding with the drop in crude oil. If you pull up crude oil futures, we have the exact opposite occurring. Crude oil is just going, hi-ho, hi-ho. It's off to 160 we go. That's what the analysts were calling for. And then out of nowhere, the market started to pull back, and it became a self-fulfilling prophecy. Look where we found support. You could draw a trend line across here. Found support, we've bounced. But I think we're going to continue to the downside. And that is going to be also a stronger U.S. dollar, which is going to continue to the upsides. We're going to see both of them continue to go in opposite directions, separate ways. Do you look as a chart? Also, something else I think is going to continue to fall, gold. And you can see it's kind of over the last year and a half, it's been consolidating here after hitting highs back in 2011. The euphoria stage, and I think we're poised again to break under 100 for GLD, bring us back to the levels we saw back in 2009, which is also going to affect, I've been talking about FCX as a trade for the downside for quite a long time. It dropped to $16 recently. It bounced, so it bounced $4. Everybody's saying, oh, you were so wrong about it. No, I was pretty spot on about the move to the downside, and I think it's going to continue absent this relief rally that we're seeing for FCX, which is also looking for downside for the gold miners. You see GDX, again, a nice little bounce, but I think we're going to pull back. And if you look, this is a 10-year monthly chart. We're just about below the 2009 prices we were previously a couple months ago, and I think we're going to continue to the downside for GDX. Let's look at some stocks that are breaking out. Same kind of thing a couple years ago, May 2013. When Apple was at its lows, I think it was about $65, $70 split adjusted. Everybody's talking about how Apple was done, and you can look at Apple here really breaking out to the upside. Now we're in a consolidation phase, but I was talking about it in May 2013 that this would be the next leg higher we had. This is the third leg higher for Apple, and now we're seeing the $1 trillion valuations being thrown around. So we had the leg 1 from 2003 up to 2009. The leg 2 up to September of 2012. We pulled back May of 2013. This is the third leg, which is going to bring us substantially higher. We see analysts yesterday raising the target for Apple to 165, buying back billions upon billions of dollars worth of stock. So this is going to help fuel continued upside for Apple, as well as the Apple Watch. Let's look at Google, which is really breaking out. This monthly chart really doesn't do the recent rally justice. Yesterday, the stock was just meandering along, up only 0.5%. A huge buy order came in at about 2 o'clock. You can see this massive spike from 65, almost a $10 move, and continued up to almost highs of the trading session. And I was looking back, if you look, I did a chart at StockTwits yesterday, also put up at the blog at OptionMillionaires.com. You could draw a trend line across the 1-year chart, or you can draw a trend line across. Here you go. You draw a trend line right here. Let me just do it for you quick, and if it's not already up, we have the support and resistance levels. But if you draw this trend line across, we're looking at about a move up here to about 580, 85 level would be where we're going to meet some upward resistance. And that is where I think it's going to head here as the week progresses. If you look, last week was a strong week for Google, and the options were just going crazy. This is the low on Tuesday. It continued to the upside all the way into the end of the week. And then yesterday, just the rally continues. You can also draw a trend line down here and just bring it all the way across, and you can see where support is being. So maybe we'll pull back down into the low 570s before continuing our move to the upside. The bond market is pulling back, so we're getting the U.S. dollar rallying. Bonds are just under long-term trend line resistance. Broke through former support there, and you can see this goes all the way back to the end of this past year. And if we get a break below there, I think the next line is 117.50, which is going to apply a little bit of move up in interest rates, which we're seeing the banks start to move up as well. JP Morgan Chase is back in the channel again. I like seeing that. So we pull up We're back in the channel, which is going to imply new record highs for JP Morgan Chase. Goldman Spectacular looks like it's going to take out that $200 level. And also looking at Citigroup, upgraded this morning by JP Morgan Chase, breaking out to the upside, and looks poised to take out new recent highs. How about Baidu, which has really been pulling back? But if you look, a similar pullback, it's a 5-year, but pull up a 2-year chart, and you can see this kind of move to the back to the $200 level is going to act as the springboard up. At least a relief bounce back up to these levels that we saw back in the summer of last year, the 220, 230 level. How about Home Depot? Earnings report spiked it to the upside. You can see this gap up. Maybe we'll come back to fill this gap, but again, $18 billion worth of stock being bought back over the next 2 years, continually handing money back to shareholders. This is an ATM machine disguised as a home improvement company. Let's look at a couple more charts, and then we're going to call it a day. We look for something bearish as well. The real estate investment trust, as interest rates start to climb, we're going to start to see these pull back. You see BXP had a nice little bounce yesterday, but I think in the whole scheme of things, we're coming back to at least a 130 level over the next couple weeks. And I have some 125 puts, so 125 would be even nicer. Simon Property Group also. Property Group was up yesterday before pulling back, so you've seen the price is rejected. And I'm looking for a move to 140.85 in the short term to 180. All right, UPB, optionmillionaires.com. Come join the chat room. It's been a great 2015. In spite of the slow melt up in stock prices, something that we've been calling for quite a while at Option Millionaires. You can see we're kind of running out of steam here. But it's consolidated. Prices, we're pulling back a little bit this morning, but we're not seeing that big correction everybody keeps calling for. So prices are still hanging in there, and so I would look for, and I've been talking about this since the start of the year, this move up to the 212.97 level, this spike high that we saw back towards the end of December, before we get any kind of meaningful pullback. All right, I'll see you in the chat room at optionmillionaires.com. Maybe we'll have a great trading session. We do have earnings tonight. What do we have? There's a couple earnings reports, but nothing the likes of what we've seen over the last couple weeks as earnings season starts to wind down. But if I do get a trade, for instance, like Garmin, we traded Garmin to the downside. For its earnings report, it's pulled back. Yesterday had a nice little bounce, but it dropped from 57.50 down under $50 2 weeks ago for earnings. So if I have one of those, I'll put it up at the blog at optionmillionaires.com. See you in the chat room. Everyone have a great trading day. Goodbye.